Hello friends, in our last session we have started income from house property, and that is the second head of the income, which is covered by the section 22nd to 27, in which we have discussed some requisites which are essential for inclusion of income under the head income from house property. At the same time, we have discussed some possible situations in which how the annual value is calculated. Now in this session, I am going to touch upon those situations in which how the annual value is calculated. At the same time, I am going to touch upon the provisions of section 24, in which how the deductions are permissible from annual value of the house property. Now first, I would like to take up the situation in which how the annual value is calculated, that is computation of annual value in case of self-occupied house property. If one house is self-occupied by the owner, annual value shall be taken to be nil if such property is not let out during any part of the previous year and no other benefits are derived therefrom. It means an SSC has the right to reserve one house for his own residential purposes. In that situation, the annual value of that property will be taken to be nil only when he has not taken any benefits from that property in that particular previous year. Now in this connection, this note is very important. If house could not be occupied throughout the previous year or sometime during the previous year because of employment or business or profession at other place, then annual value of such is taken to be nil. It means whenever a property is reserved for the residence of an SSC and that remains vacant throughout the previous year only on account of profession or employment of an SSC elsewhere, and during that period SSC has not taken any benefit from that property, then the annual value of that property will be taken to be nil. But this situation is not applicable if house property remains vacant. It is only on account of some other reasons, or we can say that it does not remain vacant on account of employment or business outside the city. If it remains vacant only because of the convenience of the SSC, then property is deemed to be let out, and accordingly the annual value of the property will be determined. Now second situation is if more than one property is occupied for own residential purposes. As I told you that the annual value of one property is taken to be nil if it is reserved for the residence of an SSC. If SSC has decided to reserve more than one house for its own residential purposes, in that situation the annual value of any one house at the choice of an SSC will be taken to be nil, and the other property is considered as deemed to be let out, and accordingly the annual value of the property will be calculated. So annual value of any one house at the choice of the owner is taken to be nil, and other houses will be deemed to be let out, and accordingly annual value is calculated. Now the option should be exercised with an objective to restrict the income to the minimum. It means the SSC must opt a house of which annual value is relatively greater as self-occupied, and other house of which annual value is relatively less must be considered as deemed to be let out. Therefore, the income of an SSC in that particular previous year, so far as under the head income from house property is concerned, will remain the minimum, and in this way the tax liability will be accordingly less. Now next situation is if a house is self-occupied for a part of the year and let out for some part of the year. Now whenever the property is let out for some time in the previous year and that remains vacant for some time in the previous year, in that situation the property is considered to be let out throughout the previous year, and in that situation SSC has no benefit of his self-occupancy in the previous year, and in that situation the annual value of that property will be calculated for complete 1 year. So in this case the annual value of property will be computed as if the property is let out throughout the previous year, and SSC will not be given any benefit regarding occupancy of the house which is for self-occupied in that particular previous year. Now fourth situation is if a part of the house is self-occupied and some part is let out. If some part of the property is let out in the previous year and some part of the house property is reserved for the self residence of an SSC, in that situation how the annual value is calculated? Now, in this case, the annual value of the part of the property let out will be computed, and annual value of the part of the property self occupied will be taken to be nil. For this purpose, proportionate municipal taxes will be reduced from gross annual value of the house let out. Now, in this situation, whenever we have to calculate annual value of the house property, we have to see how much part of the house property is let out. Now, in this way, the rent received is compared with the fair rent, and at the same time that is compared with the municipal valuation of that part of the house. In this way, we calculate gross annual value. After that, in order to calculate annual value, we deduct proportionate municipal taxes paid in the previous year by the owner will be reduced from the gross annual value, so as to calculate annual value of the house or part of the house which is let out in the previous year. But so far as the part of the house which is self occupied, then annual value of that part will be considered to be nil, and there is no question of calculating the annual value of that part of the house. Now, this is the first situation, how the annual value of the house property is determined. If a house is used by the owner for the purpose of conducting his business and professional activities, in this case the house does not constitute the subject matter of the income from house property. Hence, the question of determination of annual value of such house does not arise. Now, so far as the house property is concerned, either it can be let out for residential purposes, or it can be let out for business and professional purposes, or property can be employed for the self residence of an SSC. Now, sometimes what happens, the property is used by the SSC for his own business and professional activities. In that situation, the annual value of that property will not be calculated, because in that situation that house property is not the part of subject matter of income from house property. In this way, the assessor will be getting benefit on that account, because since the annual value is not going to be calculated, therefore, the question of calculating the taxable income from that property does not arise. But at the same time, since the property is used for conducting business and professional activities, therefore, the question arises whether an SSC is eligible to get deduction in respect of notional rent of that property while calculating taxable income from business and profession. But in this situation, we can say that this benefit will not be given to the owner of the property, because he has already enjoyed benefit when it was not considered as subject matter while calculating income from house property. Therefore, the notional rent of that property will not be considered as business expenditure while calculating income from business and profession. However, he might have incurred some expenses in relation to repairs of that property. They are considered as business expenditure, and they are fully deductible while calculating taxable income from house property. Now, we have completed the situations in which how the annual value of the property is determined. Dear friends, after determination of annual value, we have to calculate the taxable income under the head income from house property. Now, an SSC will be given deductions under section 24, and there are two deductions. First is standard deduction and second is interest on borrowed capital. First is standard deduction. Now, this is given at the rate of 30% of annual value in the previous year. So, we can say 30% of annual value is deductible for expenses incurred in relation to the house property. Now, an SSC might have incurred some expenses in relation to repairs of the house property. He might have incurred expenses for the renovation of the house property. Then these expenses are not subject to deduction while calculating taxable income from house property. However, he is permissible or he is allowed to deduct 30% of annual value as reduction in relation to expenses which might have taken place in the previous year. But at the same time, this deduction is allowed in all the cases. It does not make any difference whether SSC has incurred expenses for repairs of the house property or the liability has been given to the tenant to incur expenses for the repairs of the house property. This is a mandatory deduction which is allowed almost in all the cases. Now, in this connection, two notes are very important. First is no deduction in case of self-occupied property. Whenever the property is used for the residence of an SSC, therefore, there is no question of annual value of that property. Since there is no annual value, then there is no question of deduction at the rate of 30% of annual value. And secondly, property used by the owner for his business and professional. Whenever what happens when property is reserved for the business activities of an SSC, then 30% deduction will not be allowed, because there is no question of annual value and property has not become the part of subject matter of income from house property. However, expenses incurred in this regard are deductible for calculating business income. Now, third is whenever annual value of let out property happens to be nil or negative. Suppose the property is let out, and that is let out either for residential purposes or for business and professional purposes, but the municipal taxes paid by the owner exceeds gross annual value, and in that situation the annual value has become negative, or municipal taxes paid by the owner are just equal to the gross annual value. In that situation the annual value has become nil. In that situation there is no question of 30% deduction to be given for calculating taxable income from house property. So, we can say that in these situations 30% will not be allowed to the SSC for calculating taxable income. Now, second is expenditure in relation to house property has no relevance. It means in any previous year SSC has not incurred any expenditure in relation to the repairs of the house property. Even then he is eligible to get deduction under section 25 as standard deduction, which is equal to 30% of annual value. So, expenditures incurred in the previous year has no relevance so far as permissibility of deduction under section 25 of standard deduction. Now, second deduction is interest on borrowed capital. Now, whenever the loan has been taken either for repairs or for construction or for the purchase of the house property, then interest so paid and payable. In both of the cases the interest is deductible while calculating income from house property, but that is not so in case of municipal taxes, because municipal taxes are allowed to be deducted for calculating annual value only when they are actually paid out in the previous year by the SSC, but interest is however deductible even if it remains to be paid in the previous year. It becomes due, it is deductible. Now, whenever we get deduction in respect of interest on borrowed capital, we have to see whether the property is let out or the property is self occupied. The first situation is the property is let out. It does not make any difference whether property is let out for business and professional purposes or it is let out for residential purposes. Now, a loan has been taken in this regard, then how interest is deductible? Interest on loan taken for construction, reconstruction, renewal or repairs to house property is fully deductible. Now, SSC had taken out a loan from any bank or financial institution either for repairs or for construction or for reconstruction or for renewal of the house property, then interest so paid or payable is fully deductible. It means if interest paid and payable is more than the annual value, then it is deductible, or we can say on account of payment of interest the income for house property may be negative, or in this way we can say there is loss from house property. It may happen, or we can say that there is no restriction regarding interest on loan paid and payable in the previous year. It is fully deductible while calculating income from house property so far as property is let out is concerned. Now, second is self occupied property. If any property which is reserved for the residence of an SSC, and in that regard if loan has been taken by the SSC, then how much interest is deductible? Now, in this situation we have to see whether capital is borrowed up to 31st March 1999 or it has been taken after 31st March 1999. Now, before first of all we discuss the interest on capital which has been taken up to 31st March 1999. Now, in this situation interest is deductible to the extent of minimum of the below. Interest paid or payable or rupees 30,000. It means an SSC is not allowed to deduct interest which is more than 30,000. Suppose he has taken a loan up to 31st March 1999, but interest which is paid and payable is more than 40,000, but deduction is allowed to the extent of rupees 30,000. If capital is borrowed on or after 1st April 1999, then how much interest is deductible? Now, in that situation interest on loan is deductible up to rupees 1,50,000 subject to satisfaction of the following condition. It means if any loan has been taken by the SSC on or after 1st April 1999 only for that property which is reserved for the residence of an SSC, then the interest which is deductible cannot exceed rupees 1,50,000. But this is deductible only when some conditions are fully satisfied. First is the purchase and construction is over within 3 years from the date of acceptance of the loan. It means whenever the loan has been taken from the commercial bank or any financial institution, then interest which is not more than rupees 1,50,000 is allowed to be deducted only when the construction is over within 3 years from the date of acceptance of the loan. If the construction is over after lapse of 3 years, then interest of rupees 1,50,000 will not be allowed. In that situation, interest will be allowed to the extent of 30,000 in the previous year. And second is, loan is taken either for purchase or construction of the house. Interest of rupees 1,50,000 is allowed to be deducted from annual value only when the loan is taken either for purchase or for construction of the self-occupied property. If loan has been taken either for renewal or for repairs to the house property, then interest will be restricted to rupees 30,000. And third, it is certified by the SSC. It means the SSC is required to certify that loan which has been taken either from commercial bank or any financial institution has been fully utilized either for purchase and construction of the property which is reserved for the residence of an SSC. Now, in this regard, this note is very important. Interest is deductible up to rupees 30,000 if capital is borrowed for repairs, renewal and reconstruction of the self-occupied period. It means interest cannot exceed 30,000 if loan is only for repairs, whether the loan has been taken on or after 1st April 1999 or loan has been taken up to 31st March 1999. Now, interest on pre-construction period. It means whenever the loan has been taken for construction of the house property, but the period of construction period exceeds any previous year, or we can say construction of the house property has lasted for more than 1 year, then interest related to the construction period is whether it is deductible or not. Definitely it is deductible, but it is not deductible as it is. It is split into 5 equal installments, and that is divided in 5 equal installments from the year in which the construction is over. So, we can say that interest related to pre-construction period is deductible in 5 equal installments commencing from the year in which house is constructed or acquired. Suppose an SSC has taken out a loan 2 years back for construction of the house property, but construction is over in this year. Now, interest related to last 2 years is deductible in 5 equal installments commencing from this year, and this is deductible in coming 5 years. Now, in this regard, these notes are very important. Interest is deductible on accrual basis. It means whenever interest is paid or payable, in both of the cases interest is fully deductible. Second, no limit is applicable in case of interest payable on loan for property let out. If interest is paid in respect of a loan which has been taken for let out property, there is no ceiling, there is no limitation is applicable regarding amount of interest. This is fully deductible while calculating taxable income from house property. Maybe on that account the income has become negative, or it is called loss from house property. No problem, loss may take place on account of excessive payment of interest on loan taken for this purpose. And third is, interest on unpaid interest is not deductible. It means interest which in relation to principal amount of loan is deductible. If an SSC makes default in payment of the installment, then interest related to unpaid interest is not allowed to be deducted. Or sometimes the penal interest may be charged by the commercial bank on account of some default made by the SSC in this regard. Then penal interest again is not permitted to be deducted while calculating taxable income from house property. Now, what is the situation when interest on loan not deductible? Now, this is covered by the section 25. Interest on capital borrowed payable outside India is not deductible unless tax is deducted in this regard. Sometimes an SSC may take out a loan from outside India. Then whenever he pays the interest is subject to TDS, or we can say tax deducted at source. If an assessee makes default in deduction of tax at source before the interest is paid out, then assessor has no right to claim deduction in respect of interest on loan paid in the previous year. However, if an assessee is able to deduct the tax of 2 years in the next year, then interest of last 2 years is definitely deductible in the year in which the assessee had deducted tax related to interest of 2 years. So, we have discussed two deductions which are covered by this section 25, that is standard deduction and interest on loan. Now, in order to have better understanding of these provisions, it is better that we should take out a problem which is based on interest on borrowed capital. Now, Mr. Ankit took a loan of Rs 4 lakh on 1st April 1998 from State Bank of India for construction of a house on a piece of land owned in Delhi. The loan carries an interest at 10% per annum. The construction was completed on 31st March 1999. Mr. Ankit borrowed further capital of Rs 20 lakh on 1st April 2008 for the extension to the same house. The construction again was completed on 1st July 2010. Now, in this problem, Mr. Ankit has taken out loan on two occasions. He has taken a loan of Rs 4 lakh on 1st April 1998, and at the same time the construction is over 31st March 1999, but the loan is still outstanding. At the same time, he has again taken out a loan of Rs 20 lakh, but this has been taken on 1st April 2008, means after 31st March 1999. That is only for extension to the same house, and in this case the construction was completed on 1st July 2010. Now, how the interest is deductible, that has to be calculated. Now, we have visualized 5 possible situations in which how the interest on loan is dealt with. The first is the house is let out. The second is the house is self-occupied for some period in the previous year, and third is 50% portion of house is let out and remaining part is self-occupied. And fourth situation is if entire house is self-occupied throughout the previous year, and last is if house is used by Ankit for his own profession throughout the previous year. If the property is let out, then how interest is deductible? Now, interest on loan taken 10% of Rs 4 lakh, and that has been taken on 1st April 1998. It is assumed that the loan is still outstanding. Now, interest is Rs 40,000 is deductible, but at the same time, since again the loan has been taken on 1st April 2008 or Rs 20 lakh, and this is still outstanding. Now, in this situation, the construction of the property has lasted for 2 years. Now, interest related to last 2 years is considered interest related to pre-construction period, and that amounts to Rs 4 lakh. In this case, we have presumed that again the rate of interest is 10%. When the rate of interest is 10%, then we calculate interest of Rs 2 lakh each year. In this way, interest of Rs 4 lakh is related to last 2 years. Now, that is split in over 5 equal installment. In this way, we get 80,000. And lastly, since loan is still outstanding, then Ankit is required to pay the interest in the relevant previous year, say 2010 and 2011, and that is Rs 2 lakh. In this way, total amount of interest is Rs 3 lakh and 20,000, and this is allowed to be deducted from annual value for the purpose of calculating taxable income from let out property. Now, second situation is the house is used as self-occupied for some time, and for some time it is let out. If house property is used by the assessee only for some time in the previous year for his own residence, and for some time if it is let out in the previous year, then we can presume that the property is let out throughout the previous year. Therefore, the interest is deductible of Rs 3 lakh and 20,000 that we have calculated in the first situation, because in this case we have presumed the property is let out throughout the previous year. Therefore, the deduction of Rs 3 lakh and 20,000 is permissible for calculating taxable income from house property. Now, the third situation is if 50% portion is let out and remaining part of the house is self-occupied. It means the house is split into two parts, 50% that is for self-occupied and 50% is let out. Now, so far as interest so paid in the previous year is required to be split into two parts, 50% related to property let out and 50% related to self occupied. Now, so far as the let out portion is concerned, total amount of interest is rupees 3,20,000 that we have calculated, that is divided by 2, and in this way we get 1,60,000. Now, this is deductible from let out part of the property, but so far as the self occupied property is concerned, this is the 50%. Now, 50% of rupees 3,20,000, that comes to rupees 1,60,000. As we discussed earlier, that interest in respect of self occupied property, if loan has been taken on or after 1st April 1999, cannot exceed rupees 1,50,000. Therefore, in this situation, interest is allowed to the extent of rupees 1,50,000. Now, fourth situation is if entire house is self occupied throughout the previous year. If house is used only for residence of an assessee in the particular previous year, then again we can say that interest cannot be allowed to be deducted which is more than rupees 1,50,000. Now, how it is calculated? Now, interest on loan taken on 1st April 1998 of rupees 4 lakh, but interest comes to rupees 40,000. It means any loan which has been taken up to 31st March 1999, interest paid and payable in this connection cannot exceed rupees 30,000. Therefore, rupees 30,000 is deductible in respect of the loan which has been taken up to 31st March 1999. After that, interest related to pre-construction period, and that is rupees 80,000. It is 1/5 of rupees 4 lakh. At the same time, interest related to the previous year rupees 2 lakh, but restricted to rupees 40,000. Now, interest of rupees 2 lakh has been paid for the current year, but since amount of interest cannot exceed rupees 1,50,000, therefore, we have taken up only rupees 40,000, so as to interest cannot exceed rupees 1,50,000. But this ceiling is not applicable in respect of let out property. Now, fifth situation is if house is used for profession by Mr. Ankit. As we discussed earlier, that there are possible uses of the property. Either property can be let out for residential purposes, or that can be let out for business and professional purposes, or property can be used for self residence of an assessee. Sometimes the property can be used by the assessee for own business and professional purposes, of which income is taxable under the Act income from business and profession. Now, in that situation, if any loan has been taken in related to that property, then interest so paid is not a deduction to be allowed under the Act income from house property, because any house which is used by the assessee for conducting business and professional activities by the assessee is not a deduction to be allowed under this Act, but this is considered as expenditure while calculating income from business and profession. So, we can say that no deduction is allowed for calculating taxable income from house property, as such house property does not constitute the subject matter of income from house property. However, same is deductible as business expenditure for calculating professional income. But in this connection, I would like to say that loan which has been taken for construction of the property, or for repairs of the property, or for renewal of the property, this is always considered as business expenditure. Therefore, it is fully deductible and there is no ceiling applicable in this situation, and the entire interest which is paid and payable in the previous year is deductible for calculating business and professional income. Dear friends, in this session we have discussed some possible situations in which how the annual value of the house property is determined. At the same time, we have discussed at length deductions which are permissible under Section 24